Welcome to the deep dive. Today, Brown-Forman's Q1 Fiscal 26 results. We're looking at the numbers, the guidance, and what it signals for the year ahead. Okay, let's jump right in. Brown-Forman's first quarter results for fiscal 2026 are out. What's the immediate headline? Revenue, earnings. What are we seeing?
Well, the top line, reported net sales, they actually dipped 3%, came in at $924 million.
Okay, a decline reported.
Yeah, but here's the key thing organically. They saw a 1% increase, and that difference is really important.
Right, stripping out currency, M&A noise. That organic number shows the underlying business. What about operating income?
Similar story there. Reported was down 7%, but organically it grew 2%, reached $260 million.
Okay, so organic growth on income too. And EPS, earnings per share.
That decreased 13%, landing at 36 cents per share.
36 cents. And gross margin.
A little bit of expansion there, up 40 basis points, so 59.8% now.
Interesting. So EPS missed the analyst forecast slightly, 36 cents versus, what, about 37 as expected?
Yeah.
Under, 0.3694 was the consensus. But, and this is fascinating, revenue actually beat expectations. $924 million versus the $912 million analysts were looking for.
So a beat on revenue, a slight miss on EPS. How did the market react initially?
Positively, actually, which is kind of counterintuitive with those reported declines, right?
Yeah.
The stock was up over 4% in pre-market trading, about 4.37%.
So what does that tell us? Investors looking past the reported numbers.
I think so. It really suggests they're zeroing in on that organic growth, maybe the revenue beat, and crucially, the fact that Brown-Forman reaffirmed their full-year outlook.
Ah, okay. So holding steady on the guidance for the year.
Exactly. And you heard the CEO, Lawson Whiting, pretty much say that. He framed it as, solid first quarter performance, talked about decisive actions, and explicitly reaffirmed the outlook, confidence in long-term value.
Makes sense. That organic picture is definitely cleaner. So digging into that, where is Brown-Forman actually winning, and where are they facing challenges around the world? It's really a tale of two types of markets right now.
Okay.
You've got really strong growth in emerging markets, organically up 25% overall.
25%. Wow. Any standouts?
Oh, yeah. Mexico up 22%, Brazil even stronger up 30%, and Turkey up 39% organically. Huge numbers.
39. Incredible. And travel retail, how's that looking?
Pretty healthy, too, up 7% organically.
Okay, so emerging markets and travel are the bright spots. What about the more established markets?
That's where the headwinds are. Developed international markets were down 9% organically.
9% down. And the U.S., their home turf.
Also down, though less deeply, minus 2% organically in the United States.
Any specific countries really dragging things down in developed international?
Well, Canada had a really tough quarter, down a massive 59% organically.
59. Why so much?
They pointed specifically to the absence of American-made alcohol from retail shelves in most of the Canadian provinces. Seems like a distribution or trade issue there.
Okay, that's a big specific factor. And Europe?
Softer there, too. They mentioned soft consumer demand, blaming macroeconomic and geopolitical uncertainty. Germany was down 13%, the UK down 16% organically.
Right, so a real split. Strong growth in emerging, weakness in developed. It does highlight that strategic question, doesn't it?
Absolutely. You can see they're putting resources into those emerging regions. It feels like a clear pivot. But the big question is, how quickly can that growth in, say, Mexico or Brazil really compensate for the sluggishness or declines in places like the U.S. or Germany?
It's a balancing act.
Absolutely. It's a bet on where future growth is coming from, shifting focus maybe.
And speaking of balancing, there was an interesting point about distributor inventories in the U.S.
Yeah, that caught my eye too. They actually saw a 6% increase in U.S. distributor inventories. Net increase.
So shipments to distributors outpaced actual consumer purchases, pulling product off the shelves.
For the quarter, yes. They said it was largely driven by two things. Loading in for the launch of the new Jack Daniel's Tennessee Blackberry.
Ah, the new product launch.
Right. And also related to those major U.S. distributor transitions they've been undertaking. So some inventory build there.
Got it. Okay, let's switch gears slightly to the brands themselves. How did the portfolio perform, again, looking organically?
The ready-to-drink category, RTDs, that was a definite winner. Up 9%.
9%? What drove it?
Mostly New Mix in Mexico. That brand was up a huge 36%, really carrying the RTD growth.
Wow, Mexico's showing up strong again. What about tequila?
Tequila overall was up just 1% organically. But there's nuance there.
Okay.
El Jimador actually had a strong showing in the U.S., up 16%. They credited a new bottle design and Again, those distributor transitions helping.
16% for El Jimador in the U.S. Nice.
Yeah, but that was largely offset by Herradura, which was down 15%. They flagged it as a really competitive market right now for tequila.
Okay, so puts and takes within tequila and the core, whiskey, especially Jack Daniels.
Whiskey overall was flat organically for the quarter, 0% change.
Flat.
But again, moving pieces. They mentioned strong initial shipments for that new Jack Daniel's Tennessee Blackberry. Seems like the launch went well from a distribution perspective.
Okay, positive buzz on the new flavor.
Seems so. And Jack Daniel's Tennessee Apple grew well in Brazil, which helped. But those were offset by lower volumes for the flagship ship. Jack Daniel's Tennessee Whiskey, particularly in the U.S. and Germany, those markets we mentioned were softer overall.
Right, so innovation in specific markets helping balance declines in the core brand in tougher regions. Makes sense. Let's look under the hood a bit more. Beyond the sales line, what operational adjustments were they making? How did that affect the bottom line, starting with that gross margin improvement?
Yeah, that 40 basis point expansion to 59.8%. It's interesting how they got there.
How so?
Well, the main driver was actually the positive impact from past divestitures. Getting rid of Sonoma Cutter and Finlandia means those potentially lower margin brands aren't dragging the average down anymore.
Ah, so addition by subtraction in a way.
Exactly. But it wasn't all positive. That gain was partly offset by higher costs, some unfavorable price mix shifts, and negative foreign exchange impacts.
So managing the portfolio, shedding some brands, seems key to protecting that margin.
It really highlights their focus on efficiency and adaptation, doesn't it? Especially when sales aren't booming everywhere. They're making strategic calls on costs on the portfolio to ensure the growth they do get is quality growth. It's not just chasing revenue.
That efficiency focus shows up in expenses too, right?
Definitely. Advertising expense organically was down 3%. They said that was basically aligned with depletion trends, so matching ad spend to actual consumer pull-through.
Makes sense. And SG&A, selling, general, and administrative.
Down 7% organically.
Yeah.
A bigger drop. And that was mostly due to lower compensation costs.
How come?
It ties back to that strategic workforce restructuring they announced earlier, back in January 2025. Fewer people means lower comp costs overall.
Right, the restructuring initiative. Did they quantify the cost of that?
They did. They took about $12 million in charges for it this quarter. So a near-term cost for expected long-term savings.
Okay. And there was another item mentioned, something about drawback claims.
Yeah, an interesting one. An $18 million net benefit from collecting substitution drawback claims from the U.S. government.
What exactly is that? Sounds complex.
It basically relates to recovering excise taxes paid on imported alcohol that is then subsequently exported or used in manufacturing other products. It's a way companies can recoup certain tax costs, so a nice little boost to the bottom line this quarter.
Got it. And amidst all this managing costs and restructuring, they kept the dividend going.
Oh yeah, reaffirmed the regular quarterly cash dividend, 0.2265 per share.
And the track record there is pretty remarkable, isn't it?
It really is. 81 consecutive years of paying dividends and 41 straight years of increasing them. That speaks volumes about their financial discipline and commitment to shareholder returns, even through tough cycles.
Definitely a point of stability for investors. Okay, so that's the quarter. What about the road ahead? Fiscal 2026. What's the outlook? What's the guidance telling us?
Well, they reaffirmed their previous guidance for the full year, and honestly, it remains pretty cautious.
How so?
They're still expecting organic net sales to decline in the low single-digit range for the full fiscal year.
A decline for the full year.
Okay.
And operating income.
Same story. Organic operating income also expected to decline in the low single-digit range.
So projecting contraction on both the top and bottom lines organically for the year.
That's the official word, yes. In capital spending, they're guiding $125 million to $135 million.
And the commentary around that guidance, still cautious.
Very much so. Both the CEO and CFO flagged a continuing challenging operating environment. They pointed to low visibility because of macroeconomic and geopolitical issues, consumer uncertainty. They even mentioned potential hits from unknown future tariffs and lower sales of used barrels, which is a smaller side business for them.
That level of detail on the potential negatives definitely signals caution. They're not sugarcoating the environment.
Not at all. It feels like a realistic assessment of the landscape they see right now.
And this leads into something you mentioned they addressed on the earnings call, this whole debate about whether the current slowdown in U.S. spirits is structural or cyclical, the beating a dead horse question, as they put it.
Right, and CEO Lawson Whiting came down pretty clearly on the side of cyclical.
What was his reasoning?
His main point was the speed of the slowdown. He noted total distilled spirits growth went from, a healthy plus 5 or 6% down to negative 2 or 3% in just 6 to 8 months.
That is a rapid shift.
Exactly. And he argued that's just too fast for big structural changes, things like the rise of cannabis or the impact of GLP-1 weight loss drugs to be the sole explanation. Those things take time to really reshape behavior on a mass scale, was his point.
So he sees it more as an economic pinch, temporary factors?
That seems to be his primary framing, yes. He acknowledged the trends like drinking less but better, or people trying low-no alcohol options exist.
But he thinks the impact of things like GLP-1s or cannabis might be overstated right now.
He said he felt it was moderating and perhaps blown out of proportion. Interestingly, though, he did express specific concern about unregulated hemp-based beverages, so he's not dismissing all potential disruptors.
It's a crucial question for the industry, isn't it? Cyclical downturn or fundamental shift?
It really is. And you could argue Brown-Forman's strategy is trying to hedge that bet.
How so?
By leaning into premiumization, the drinking better part, and investing heavily in those high-growth emerging markets, they're setting themselves up, whether it's just a temporary squeeze hitting mainstream consumers in developed markets, or whether there's a longer-term shift in habits. They have growth engines while also adapting in mature markets.
And they did mention some tailwinds they see long-term.
Yeah, things like Gen Z reaching legal drinking age globally, the growth of the middle class in many parts of the world, and more women embracing spirits. Factors that support long-term growth for the category.
And they're not just waiting for those tailwinds, right? They talked about specific actions.
Definitely. That significant evolution of U.S. distribution is ongoing, the restructuring is meant to improve efficiency, and they highlighted product innovation.
Like the BlackBerry launch. Any feedback on how Jack Daniel's itself is doing, brand-wise?
They said they're seeing improvements in brand health metrics for Jack Daniel's, especially with younger adults, LDA to 34.
What are they doing to connect with that group?
They mentioned a new campaign, What Makes Jack Jack, and pointed to partnerships like with the McLaren Formula One team and various music sponsorships, trying to keep the brand relevant and visible.
And that BlackBerry flavor, they see that as a big deal.
Yeah, they framed it as a potential multi-year global growth driver. Said the initial feedback has been really strong. So it's a concrete example of them innovating within their core brand to drive excitement.
Wow, okay. So pulling it all together, it's been a really insightful look at Brown-Forman.
It has a complex picture.
Yeah, a company navigating, a tricky global scene, focusing on that organic growth, innovating with things like the new BlackBerry Jack, and really managing costs tightly.
And that leadership view, leaning cyclical on the current headwinds, while positioning for longer-term structural tailwinds.
Absolutely. It really makes you think, doesn't it? For you listening, as these global economies keep shifting, where do you see the next big growth spurt in spirits? Is it going to be new products, tapping into new markets, or maybe a whole new way of connecting with consumers, something to chew on?
And just one final note related to the people behind the numbers. CFO Leanne Cunningham is set to retire next May 2026.
Oh, wow.
Yeah, after 30 years with Brown-Forman, it's quite a tenure. They emphasize focusing on a smooth transition, just a reminder of the long-term perspective and the people involved in steering these big companies.
30 years is incredible. A lot of history there. Well, we covered a ton today, from the detailed financials to the global trends and the strategic thinking at Brown-Forman. Thanks for joining us on this deep dive.
My pleasure.
Until next time, keep digging for those insights.